Hi, my name is Bruce Fenton. Thanks very much for having me at the Digital Banking and Mobile Payments Summit in Karachi for 2017. It's a real pleasure to join you. I'm going to be talking a little bit about blockchain technology, and this is an area that I think is one of the most exciting and interesting areas of technology since the internet itself. So I'm going to talk a lot about what's going on in the space. And first of all, I just want to thank the hosts at Terrabiz, Hamza, and the rest of the team. I wish I could be there in person. I really appreciate you taking the time to hear about this exciting technology. So real quickly, what I'm going to run over here is a lot of things in a short amount of time. In about 20 minutes, I'm going to talk about what's happening in the space with Bitcoin and blockchain technology in general, some of the other non-coin or non-currency platforms like Ethereum. I'm going to talk about the state of banking and some of the other organizations that are looking into this. I'll talk a little bit about what the technology actually is at its basic level, what a blockchain is and how it works, in my opinion. Talk a little bit about the drawbacks of this technology, as well as some of the things that you can do to take advantage of it. My background, you can find this online. I won't spend much time on it. I started in wealth management at Morgan Stanley, founded Atlantic Financial over 20 years ago, and I've done many billions of dollars in transactions in the financial services business. These days, I focus entirely and exclusively on blockchain technology. So what is a blockchain? At its core and its foundation, basically a blockchain is a ledger. And a ledger is really just a statement of truth. If I were to ask you how many times you interact with a ledger in a given day, you might guess a few times, 5, 6, 10 times, something like that. But in reality, it's actually thousands of times. You interact with a ledger thousands of times in a day, because it makes up the very fabric of what our reality is when it comes to business and finance and things like that. When you get in your car, there's a ledger that represents that you're allowed to be in that car. If you check into your hotel room, there's a ledger that the hotel has that says you've paid your bill, and another one that your credit card company keeps, which says that you've actually paid the bill. And your workplace, your money, your finances, from the smallest level to the largest multinational or government, all of these transactions and everything that makes up of our day-to-day life is tracked by ledgers. So what a blockchain is basically is a new form of ledger, and the best ledger that's been created so far. The ledgers that we've been using, like this picture of this book, haven't really changed that much in hundreds of years. In fact, this same book you could see a couple hundred years ago, or you could see right in some of the small businesses right in Karachi or Boston or wherever. There's a lot of people that still keep track of things with a handwritten ledger. So the technology hadn't changed very much in a long, long time. But throughout this period of hundreds of years, we've always needed a trusted third party to say what a ledger really is, and that statement of truth really is true. So if I take $1 million from my bank account and put it into your bank account, that is only true in the minds of the bank because someone else says it's true. You and I can't rely on each other to do that. We have to rely on a trusted third party to say, yes, this is true. The example that I like to use is comparing it to email for money. So we've had email technology for well over 20 years now. Why can't I just email you $1,000? Why couldn't I just email you and say, here, Hamza, here's $1,000? I could do that. The technology has existed for a long time, 20 plus years. But if I send that, what can Hamza do with that? He can't use it. He could go and say to somebody, hey, I know Bruce is good for it. I trust him. And maybe he could convince them to accept it. But there's still an issue of him knowing that I didn't send that to multiple people. And you still need some kind of party to verify that it's true. Whereas if I send that through a bank, the bank is saying, yes, this is true. So what a blockchain does, it basically takes that statement of truth, instead of having one central party that is deciding what is true or saying what is true, it is spread out among peers. So there's lots and lots of people that contribute to this. The way that I could describe it is like a town square ledger. So suppose we took one of these old style books that you have a picture of there, and we put it in a town square, right in the middle of the center of town in your neighborhood. And we wrote in it, and I said, I give $1,000 to Hamza. Well, then everybody else in the town came up and signed a signature on it. That would be a pretty good statement of truth, actually, because we'd have all of the people in town saying, yes, this is true. And the more people you had, the better. Okay? So peers verifying the truth of something can be a good system. So let's modernize it a little bit and speed it up. Suppose instead of using this old book, you used Google Documents. And we put it out there, and instead of having a couple hundred people in the town, we had people all over the world, thousands of people look at it. That would be a better statement of truth. It would be better than the book. Still would have some problems. It could be hacked. It could be changed. There's issues of what's called a double spend, where I could send that same document to multiple people, and we don't know which one is the most accurate, and so on. But basically what blockchain technology does is it solves that problem. It makes it so you can have a ledger that's printed for the whole world to see and the whole world to verify, and thousands of people verifying that this is true. And instead of a bank saying, yes, this statement is true, you have thousands of peers who are saying, yes, this is true, yes, this is true, yes, this is true. And each time they're saying that, the entire list is printed again. Each block or section of transactions that is verified is added to another one. That's why it's called a blockchain. So you eventually end up with this very, very long list of saying what statements are true. So it actually becomes better than something like a bank. The other issue that would happen if you had this town square ledger is, what about privacy? You may not want to say that I gave $1,000 or $1 million to someone and have everybody else in the town know that. So blockchain technology solved that as well by using cryptography and privacy to have numbers represent the transaction. So I don't even need to know who the person is who I'm sending it to. They don't need to know who I am. The ledger will say this number has this much money and it went to this number. And that is only controlled by a person who has a private key, basically a password portion of that number. So this technology was invented in 2008, 2009. In 2009, the first application of this technology was launched, and that was Bitcoin. The headline that day was that the chancellor was on the brink of a second bailout for banks, which was kind of ironic, and that headline was actually included in the original code as sort of a time-stamping mechanism. So it was first discussed in a white paper by Satoshi Nakamoto. We don't know who Satoshi Nakamoto is, which is unusual for people when they first start with this technology, but actually one of the great things about this is because it is peer-to-peer and decentralized, there's no leader of this technology, so it doesn't really matter who created it. There's nobody who has any control over this technology. A true blockchain is open for peers to use, and it's open for on the internet, and there isn't anybody who owns it or controls the technology. So this is very exciting. A new ledger is a big deal. Ledgers are a big part of our world. We don't hear about them a lot, but they very much are. And that's why a lot of these major companies are jumping into this. Microsoft, Citigroup, Fidelity, Deloitte, and so on are all jumping into this technology in a big way. There's also some very notable people like Mark Andreessen, who's one of the top venture capitalists, sort of a father of the internet. Sir Richard Branson has said positive things about Bitcoin. Eric Schmidt from Google. The list goes on and on. There's many, many of these that I could share, where some of the best and brightest minds, the original founders of PayPal and some of these other exciting companies, have all jumped into this technology. So the first and most well-known application, as I mentioned, is Bitcoin. That's the first use of blockchain, and that's both inventions came about at the same time in this white paper. The invention of blockchain and the invention of Bitcoin were simultaneously, and that remains the largest and most well-known use of the technology today. Basically what Bitcoin is a new form of currency. It's a digital money, and it allows you to transfer money pretty fast and pretty inexpensively. It's also limited in size. It's not controlled by any Federal Reserve. There's only a finite number of Bitcoin that will ever be released. So that number is 21 million, and that won't change. There's no central control, as I mentioned, and you can buy and sell it just like a stock or just like other currencies, just like you convert your euros to dollars or rupees to yuan. You can convert your Bitcoin to euros or dollars or rupees or back and forth. You can also use it for purchases. Many of those companies that I had on the last slide, like Microsoft, Dish, and Overstock, you can buy products with them using Bitcoin right out of your Bitcoin wallet. It is it can be held on a wallet on your phone. It can be put on a computer. It could even be, you could even print out the codes and put them on paper. So this decentralized ledger, as I mentioned, is not controlled by any one person or group. It's distributed among many. And that's a really key feature. Because it's distributed, you can't break it or force it to do anything. You can't, there's no court order or system that can seize Bitcoins or tell anybody what to do, because there is nobody to tell. There's nobody who runs it or controls it. It's open source software, and it's decentralized, just like the internet. There's nobody who is CEO of the internet. There's nobody who's CEO of blockchain, of a true blockchain technology. And you notice I say true blockchain. The reason for that is because there's some companies that have kind of jumped on this bandwagon, and they have basically fancy databases that they call blockchains, but really aren't really blockchains. For me to consider something truly a blockchain, it does have to actually be decentralized and not have any central point of control. There are many blockchains out there, some stronger than others, but to be a real blockchain, you really do have to be decentralized and open. So this list that we have of all of these transactions, it's continually updated. This video shows a website called blockchain.info, which tracks all of the transactions. So when I make a transaction and send my $1 million from one account to another person, or $1,000 from one person to another, those numbers, not the people, but the numbers are represented by a transaction that goes on this long list called the blockchain that keeps getting verified by people, and it stays there forever. So it's a very, very good statement of truth, and you can go back years to see transactions that happened and see the history of what has happened. So it's very, very interesting. The way that this coin, this currency, in the case of Bitcoin, is issued is through a process called mining. Remember I mentioned that there's a lot of computers that go out and verify what is true. One motivation they have to do that is some of them are miners, and the miners are basically one of the backbones of the network that is out there verifying what is true. Now, the reason they do that is because they have a chance of getting awarded coins. So the inventor of Bitcoin was very clever. They solved two problems at once. They incentivized people to verify these transactions, to say what is true, and use their computing power to do so. But they also made a fair, relatively fair way of issuing the money into the supply, into the people. Because if you think about it, if you have a new currency, how do you get the money out there? I mean, if you just sell it for sale, then only the wealthy people who already have money are going to have it. It's hard to distribute. So this is a way to do that. And as you can see, when Bitcoin first came out, you could just turn on your computer, your laptop. You could mine Bitcoin, and you could end up with thousands of Bitcoin, which would now be worth millions of dollars. As you can see from the photos, over time, you had some like this one down here in the corner, which was probably an advanced home or small office lab, and now they've grown to the point where they're large data centers, and it's a very, very competitive industry that makes millions of dollars, because every 10 minutes, 12.5 Bitcoin are awarded to somebody on the network, and the more mining power that you put into it, the more chance that you have of getting that reward. So the big mining companies can make millions of dollars. So after Bitcoin came about, this blockchain technology started to be recognized as more than just Bitcoin, and it created a lot of, inspired a lot of other alternative coins that copied Bitcoin. Litecoin was one of the first and most well-known. It's very similar to Bitcoin, but just a little bit faster. And the creator had a very clever slogan of calling it silver to Bitcoin's gold. And then many, many others came out. Some of them were scams. Some of them were poorly run. Some of them were very good. There's some interesting technology. Companies like Monero and Zcash and some of these others. Dogecoin came out kind of as a joke. And we've had hundreds of these different alternative currencies issued. Then, probably starting mainly early 2014 or so, you had other people recognize that this technology could be not just for coins, but for other types of tokens. So we had Ethereum came out, which allows, it's not primarily used as a currency, it's designed to allow you to put computer programs on a blockchain. So you can have an entire computer program or a smart contract that you put out on the blockchain, that is totally decentralized. So you had Factom, which does auditing, Ethereum, Ripple, which is sort of a back end of bank wires, Augur, which is based on the wisdom of crowds, and a few other projects like that. So there's been hundreds of these, from ranging from ingenious and very profitable to outright scams. But there's a lot that is being built on this technology, and there's a lot of big corporate interests, as I mentioned. Some of those are also not really what I would call real blockchains, but there's a lot of interest in this space, and there's been some very, very interesting both currencies and tokens that have been released on this. So I mentioned that there's some of these other applications beyond just currency that blockchain technology can be used for. Ethereum is one of the most exciting. That's the second most valuable alternative token to Bitcoin at somewhere around $3.5 to $4 billion, and that enables smart contracts. There's also some others, like I mentioned, prediction markets with Augur. There's a lot of people working on things like healthcare, land titling. I don't know how much of an issue land titling is in Pakistan. I know in some of the neighboring countries it's an issue, but to be able to put something on a list, a ledger that states what is true, this person really owns this land, and that can't be transferred or tampered with unless that party agrees, that could be very, very valuable in a lot of emerging markets, probably valuable in Pakistan as well. Accounting and some of these other areas that have been interesting for blockchain technology. So there are some drawbacks of this technology for sure. One I just mentioned, which is sort of there's this hype. There's some projects that aren't even really blockchain projects. When you are looking at real blockchains, it is still new and untested. It's still experimental in some ways. There may be things that come about from this that we aren't really sure of what they will be and how they will impact us. It's also important to note that blockchain can do some things, but it can't do everything. When electricity first became popularized, people said, wow, electricity is going to be a big deal. And they had electric hats and electric coats and electric shoes. It didn't mean it was a good idea just because electricity was a good idea. We see that similar hype with blockchain. We see people out there trying to blockchainize everything. I always joke that you might put dog training on the blockchain or something like that. There's certain things that just don't work for blockchain technology. Hacking of intermediaries or end users. So real blockchains are very, very difficult to hack. Bitcoin has never, ever been hacked. It has never been hacked. You may hear headlines that mention hacking in Bitcoin, and in those cases, it is something like Mt. Gox, which was a large exchange, where somebody holding the Bitcoin was hacked. So it would be sort of like if your email provider was hacked. It doesn't mean the whole internet was hacked. But because this technology is irreversible and there's no central party that you can go to complain if somebody steals your money or get it reversed or something like that, hacking is a significant issue. Regulations is also an issue. Governments around the world view this as either competition or with lack of understanding, and they have difficulty with it. So it's heavily regulated depending where you are. There's a lot of opportunity in this. You can own the individual currencies. People who bought Bitcoin early or bought Ethereum early made millions and millions of dollars, typically off of thousands of dollars in investment. You're looking at 50 or 100 time return. depending when you invested and what you invested in. And even some of the newer coins have done very well as well. Like I said, there are certainly some scams. It's something to be very, very cautious of. You can also invest in companies in the ecosystem, companies who are running exchanges or wallets or service providers. There's games, there's auditing companies, there's all kinds of exciting technology that is being built on this. You can invest in funds or partnerships. One of the most interesting things is the potential to change banking and central banking. Banking can change quite a bit because of this. And really, ultimately, if we ask why we need banks, and especially why we need central banks, most of those answers are outdated now. The technology is better, and we don't really need banks anymore to tell us what is true, and we definitely don't need central banks to issue currency and maintain it and control its supply. Frankly, they haven't done a great job globally anyway. Our government in the United States being one of the leaders in making a lot of mistakes with the way that it runs its central bank that have caused a lot of harm, frankly, around the world. We now have a better model, and it's my hope that this technology will ultimately replace a lot of the functions that are being done by banks, and especially central banks, which cause a lot of harm in the world. Now, specifically for Pakistan, you have a lot of economic opportunity there. You're a growing economy. You have a vibrant tech sector with a lot of tech aptitude, and there's a lot of heavy lifting and a lot of need for high-end developers on these projects. So that's something that you have as a great advantage. The large population helps a lot. And also just being a growing economy in an emerging market, just like the United States and every other country, I think you would benefit from sound money, money that is not decided by the whims of politicians, but decided by market forces and math, and is incorruptible and truthful. So that would be a very exciting opportunity. There's a lot of things that can be done with this. As David Johnston, who's an active person in this industry, said, everything that can be decentralized will be decentralized. So it's a very exciting time, and there's a lot of opportunity out there. My name again is Bruce Fenton. You can reach me by my email, bruce@atlanticfinancial.com. This video will be posted to YouTube, so you can view it again and share it with your friends. I'm also on LinkedIn, and I'm pretty active on various social media platforms like Facebook and Twitter and so on. I definitely welcome any questions that you have. And I did have a couple that Hamza sent me, which I will answer right now very quickly. First of all, and these are from people who attendees or people who I guess before the event. First of all, we can see Bitcoin blockchain technology in our current regulatory and banking system framework, and keeping in mind that transactions are validated by the miners. I believe what this question is asking is, how can we integrate Bitcoin technology into the current system, into a regulatory environment? My belief, personally, and I'm certainly not a lawyer, and I'm definitely not an expert on the Pakistani legal system or any other really, but my belief is that regulations should not hinder technology. New technology can make things easy for criminals. For example, Bitcoin can be used for online drug purchases or money laundering or things like that. But that's what new technologies do. They make things easier for people. The internet makes it very, very much easier for a lot of kinds of criminals and crime to occur. Cell phones make it easier for criminals. Even shoes and cars make it easier. So I don't think that regulations should dictate what technologies come out. I think that innovation should dictate it, and when there's a demand and when there's new technology that is invented, I think that that should go forward. So I would encourage any of you who are regulators or have contact with regulators to urge a hands-off approach. And I also, when possible, based on whatever legal advice you can, I would say you go ahead and do things and do something new, just like we did with the internet. And it might be better to go ahead and do things and get them moving than to wait around for antiquated government systems to catch up to that. And as far as the question about the transactions being validated by the miners, yeah, miners are one way to validate the transactions, and that basically is just the nature of this distributed peer-run system of validation. So it actually, maybe a progressive regulator would recognize that you don't really need centralized systems to say what is true when you have this vast and powerful network that is saying what is true. Next question. What are my thoughts on the recent debate on Bitcoin Core versus Bitcoin Unlimited, and what will happen if this occurs? Okay, that would take a little longer than I have to answer, and it's a bit of a technical question depending on who you are. Those of you who follow Bitcoin closely will know that there is a technical debate, a very vibrant technical debate between different sides in our industry about how to scale Bitcoin faster. How should Bitcoin be made so that it can absorb as many transactions as something like Visa or PayPal? And in simple terms, there is a security trade-off. The easier you make it to validate, the more bandwidth it takes, and therefore only certain groups can afford that bandwidth and that kind of computer power. So if you made it very, very, very fast, you would make it so that it requires so much bandwidth because so much traffic is going in that only large corporations could afford to do it. And that creates centralization, which is a security risk. So there's a big debate between different sides on how to scale this. And by the way, all of these other alternative coins and tokens are going to face this same issue once, if they ever are lucky enough to reach the popularity of Bitcoin. Where will this go? That's hard to say. If it happened now, there's a lot of things, and I can't get into all the technical issues of it, but one of two things is going to happen. Either this is going to be solved and people are going to agree, or one side is going to win or lose, or it's going to split, and you can split the network, and then you have two kinds of coins. That can be a contentious and fought split, or it could be something that somebody does on purpose, like Litecoin was originally kind of a split of Bitcoin. And it can actually be healthy if that happens. If there truly is two different visions from two different teams, it could be okay if it splits. That happened with Ethereum. There's Ethereum, and now there's something called Ethereum Classic. Again, I can't get into too much technical on it, but shoot me an email or read some of the other things that I've written on this topic. But it's very, very fascinating, and it's an interesting thing in our industry that's going on. The last question is, do we really need identity to do economic inclusion, or can we do economic inclusion on a basis of anonymity? Blockchain empowers unbanked people without having identity. Yeah, absolutely. That's one of the great benefits of this technology, is that you don't need to have identity attached. If I was in person, I could show you. I could take my phone and I could have you download a wallet, and I could send you some Bitcoin right now as a demonstration, and I don't need to know who you are to do that. I don't need to know your real name. You don't need to know my real name. And it is verified by math and by a network of peers that says this is what is true. This person really owns this money. It's not based on identities or governments or something like that. And I think that kind of relates to what is really powerful about this. This is money for the people. It is the first time that we have truly global money where I'm on the same platform as you are. It's not a matter of dollars or rupees or euros. Bitcoin is Bitcoin, whether it is in Karachi or Lahore or Kensington Palace or Boston, Massachusetts. We're all on the same platform, and that's very exciting. And it's also something that is run by our peers and has a lot of potential for good, because let's face it, governments haven't always done a great job for their people, and putting more control into free market economics and the freedom for people to do what they want and trade how they want is definitely a positive step. I think it's just as positive as something like the advent of the printing press or the internet, which saw global peace increase quite a bit and saw the standard of living for a lot of people improve quite a bit. So it's really, really exciting technology. It's a big deal. I think that it's going to be here to stay. And I definitely welcome your comments and input. I hope to hear from you. Thank you very much for the opportunity to speak to you today. Have a great rest of the conference.